My name is David Rhodd from Limitless Solutions Financial Group, and today I want to speak about interest rates. Everyone's looking around and we see that the interest rates are going up, they're going higher. We've already been told that they plan to increase the interest rates for the rest of 2022. Why is this happening? You're probably asking. Is this a good time to lock in? Should I switch from variable to fixed? These are some of the things that I'm going to try to answer today and provide some clarity for you today on a decision that you can make in regards to interest rates. So why is this happening? As you're aware, if you go to the stores right now, things are a little bit more expensive. That hamburger is costing 20 cents more. Those chips are not in stock. And so there's a lot of things happening with the food chain right now. We're in a situation of inflation right now, where things are costing us a little bit more than they used to cost us pre-COVID. And a lot of this is a result of COVID and the shutdowns and the backlog that we had and the shipping disruption and all kind of stuff like that, which is all contributing to where we are today. So, and as you are aware, there's a lot of bidding wars happening on the properties and stuff like that. So they're trying to slow things down a little bit. They're trying to make sure that we don't go too far in regards to inflation having it increase and stuff like that. So they're increasing the rates to kind of just bring everything down slowly and surely. Now, they've already told us that they plan to do it for the rest of this year. I know. So, what do you do if you're in this situation? I'll talk about my personal situation. I always say that when you're looking between fixed and variable, yes, it's an interest rate decision. Yes, it's a cost saving decision because everyone wants to get the lowest rate and they want to pay the least amount of interest on your mortgage. And I get all that. So that's important. And we're going to touch on that as well. But I also think switching between fixed and variable is also a personal decision. And I like to equate it to when you buy a car and you're driving a car and the car has insurance on it. The reason why you have insurance on your car is because in the event anything happens, you'll be protected. Your insurance will be, you'll pay off whoever you hit or whoever hit you, etc., and your car will be fixed. That's how I like to look at variable versus fixed. So when you're in a variable situation, yes, you are subject to market fluctuations. When the interest rate goes up, you're paying a little bit more. When the interest rate goes down, you're paying a little bit less interest on your entire mortgage. But there's also some benefits of the variables. So for example, the variable, when you're breaking your mortgage or refinancing your mortgage or moving, you're subjected to 3 months interest penalty, which, depending on the mortgage type that you have, it could be, $5,000. Sometimes we see them $7,000, somewhere around there is you see them. Now, when you go fixed, the good thing about fixed is that your payment is the same every single month, every bi-weekly. You know exactly how much is coming out of your account. There's no fluctuations or anything like that. If you're putting yourself on a strict budget or you are on a strict budget, fixed is the way to go. The small downside with fixed, the small downside is that in the event you need to move, in the event you need to refinance, a lot of the times your penalty is going to be based on IRD, which is interest rate differential. And what that means is that your penalty to break is going to be a little bit higher than it is on a variable mortgage. Sometimes it can be pretty close depending on which lender you were placed with, but sometimes I've seen it as high as $23,000. Yikes, I know. So when it comes to making a decision between variable and fixed, let's take money out of the way for a second. I like variable, me personally, because I'm self-employed. I want to be able to access that equity in my home. I want to be able to take that equity and invest. And I want to be able to do things with my mortgage at any given time. So that's why I personally like to stay variable, and also the benefits of, variable over the historical time has always been lower than fixed. So I've been saving on interest over that period of time. But it's mainly for the flexibility that if I need to refinance, if I need to sell, if I need to pull out equity, if I need to, do some renovations, if I need to pump some more money into my business, I have all that at my disposal, and I don't have to worry about a big penalty right now. and I can handle the the little influxes in the interest rate going up and interest rate going down and stuff like that. It doesn't affect me that much. So that's a personal decision. Now, when it comes to the fixed, the personal decision for you is, do you have a set income that comes in every month? Do you like to know exactly how much you're paying every single month? Are you planning to stay at your residence for the next 5 years or until your term is finished on your mortgage? So you don't need to move. You're not thinking about refinancing or anything like that. So then fixed may be the way to go. So what I want you to take from this entire conversation that I'm having with you on interest rates and the fact that they are going up at this point in 2022, things can change, but as of right now, we know they're going to be going up. It's a personal decision on money. That's one, how much you want to save on interest versus how much you don't want to save. But there's also another part of it is the flexibility. With a fixed mortgage, it's not as flexible. I mean, it is flexible that you can pay it off and still refinance, but you're going to have a bigger penalty. So that's why I say it's not as flexible, because people usually think about that big penalty and they're like, I don't want to do this right now. With the variable, the penalty is smaller, so it's easier to swallow if you need to refinance or something like that. And then if you can handle the ups and downs of the monthly payments, some banks don't even have it reflected on a month-to-month basis. They do it on a yearly basis, right? So it's recalculated. So you'd have to check with your bank to see which program you're actually on. So that would be my decision factor in picking between variable or fixed. So what do you think? There's probably a place here where you can comment below or engage. If you have any questions, feel free to reach out. My name is David Rhodd from Limitless Solutions Financial Group. I'm a principal mortgage broker. Feel free to reach out at any time, and have an awesome day. Hey, it's David Rhodd, and I want to thank you for taking the time to watch this video today. I don't take that lightly. So for you, I got a special treat for you today. If you feel that you're paying too much in taxes, you're not getting as high as return as you want on your investments, you probably have little to no cash flow, or you only have one stream of income or even less than 5 streams of income, then I created a special video for you that I call the Blueprint. It completely changed my financial trajectory, and I want to share this with you for free. So just click the link below and you'll get access to the video, which I call the Blueprint, which just changed my life financially. Speak to you soon. Bye for now.